I think there's a correction coming, as we talked about at the beginning.
Well, when it comes to Ethereum, it's a smart contract.
A lot further. But all prior cycles have multiple 40%, 30% corrections.
It's a remarkable piece of engineering, but really it's on the backbone of telecom.
But you'll have a lot to play in that sphere. But with India as the core allocation that should outperform.
No, I think we've seen this incredible volatility when something is disruptive. Think about Tesla. Tesla has the same DNA volatility as Bitcoin and Ethereum.
Yeah.
In fact, Ethereum is more volatile than Bitcoin, like silver is more volatile than gold. But whenever something is disruptive and is like digital money is coming into the market stream and in full throttle this past year, it's going to have all these naysayers and early adopters. So we have seen now the gold market, come through a correction here, and everyone's focused on Ethereum and Bitcoin. I say that both are incredible alternative asset classes. But this flash crash in Ethereum happened a little over a year ago when Ethereum surged to 300, fell to 100, came right back up to 200, and sort of went sideways before it went on to these other levels.
From here, do you see Ethereum continue to outperform Bitcoin?
I do, because they're very different, David. You've got to look at the industrial. So when we talk about silver, it has much bigger industrial footprint because of solar panels. Well, when it comes to Ethereum, it's a smart contract. So when you hear about JP Morgan stable coin or other people coming with these stable coins, they basically are using Ethereum algorithm. That is a pent up demand. And now we have this explosion in decentralized finance known as DeFi. Last year grew by 20 billion. I think in the first month of this year it was 30 billion. It's all in the backbone of Ethereum. So Ethereum is a unique animal in its own way. It's the second biggest market cap and most liquid cryptocurrency. But I think Bitcoin is like the collector's item. It's like, for me, at the Andy Warhol original paintings. It's going to go up in value as more people come in and buy it. They can buy in fractals. And we're seeing that in what's called Metcalfe's Law.
Yeah.
Metcalfe's Law explains why you're seeing this rise in crypto. Don't think so. I think it's a remarkable piece of engineering. But really, it's on the backbone of telecom. Blockchain really came out in the early 90s before the internet was released, and it's because the banks actually are the biggest movers of money. Not, it's telecom companies that do all the wiring between. And then the idea was, could they create a blockchain, a ledger, this open ledger, to be able to track everything? This concept that Satoshi basically took was already there and polished it up to create decentralized finance, as just the same as a lot of gold bugs don't like central banks printing all this money, practicing MMT. The new world, the new millennials, etc., were addicted to this digital world. And that's why it grew. And we can see this past year what happened when the supply halved for Bitcoin. And that only took 6 months, and all of a sudden prices doubled and tripled. So I remain very bullish, but they're going to be extremely volatile.
You mentioned that these kids are speculating. Well, when they get older, Frank, when they become close to retirement age and they don't want to speculate in volatile assets anymore, would they be dumping their Bitcoin and Ethereum, and then the biggest holders would then release them into the markets, and we'll have a big sell-off?
I don't know. It's like asking me, when the internet first came out, is ask Jeeves, is he still going to be around? He's history. It evolved, and then Google, and then Yahoo was first, and then Google turned around and basically, as they like to say, Uberized Yahoo.
Yeah.
I think that it's early innings in this digital world, and I think it's only going to grow. It's going to remain extremely volatile. We saw that now in PayPal, you can buy Bitcoin. If you go to some of these websites, in particular in stocks, you can go to Robinhood and you can buy Bitcoin. So it's a big game changer what's going on in the capital markets.
For the crypto miners, where's the future for crypto miners? What kinds of coins should they be focusing on for the highest margins, to meet the biggest demand? What are the coins? What are the sectors you would be paying attention to?
For us, it's been Bitcoin and Ethereum. We announced today that we've expanded our footprint, that we're pushing for 2,000 petahash. We're almost there. We made that to get up our ASICs because we are the biggest GPU miner Ethereum in the world. Now, there's many other coins. We've gone back and forth to the Ethereum Classic, etc. But the issue is that we're so big that all of a sudden we could be too big of a player in that coin. So we really just want to stay focused on Ethereum, which we think has a 3-year window of huge opportunities on the upside, and Bitcoin mining.
It's done pretty well. But compared to prior cycles, it should go a lot further. But all prior cycles have multiple 40%, 30% corrections.
Yes.
I think it probably goes higher before we get the correction. So Bitcoin might get a 50,000. There's even an outside chance that we go up to 100,000 by mid-Feb and then correct 40%. I don't know. My way of playing that is I'm all in. I'm not expecting to close any positions until the end of the year, maybe into next year. So I will just, if I get any more cash, I will just buy a dip. And I'll be tilting it more towards Ethereum than Bitcoin. I'm currently 80-20. Add to Ethereum because I think it's going to outperform in this cycle.
It's incredibly tempting to take some profits and take cash off the table. I've exercised restraint, again, based off the conversation, actually not that we had last spring, but just commentary I've heard you talking about your strategy. You're not trying to trade it. You're like, I'm not losing sleep over this.
So if it had a 50% crash, it looks horrible when you see a P&L go down, but it's okay. And if you can then add more for the next run up, because these crypto cycles tend to be much longer and much sharper than we used to in traditional markets. I think the chances are it goes somewhere between 200,000 and 300,000 by, Feb, March next year.
Now, you briefly mentioned there, you're looking at Ethereum. You were weighted 80-20 BTC to Ethereum, and are you expecting that to change in 2021?
Yeah, I'm hoping to add to Ethereum soon, and I will probably continue to add to that because if I look at the chart of Ethereum versus Bitcoin, it looks like it's basing. Usually, Ethereum is also very much following the 2017 Bitcoin cycle, both in price, in number of wallet addresses, in market cap. I mean, it's identical. It's kind of spooky, which tells you this is being driven by Metcalfe's law and adoption effects than almost anything else. So if that's the case, then we know Ethereum has a decent chance of getting to 20,000, considering right now it's at 11,000, 1,180.
Yeah.
I mean, holy shit, that's a value proposition. Even with Bitcoin going to 200,000 to 300,000, one's 8x, one's 16x from here.
Yes. Okay. Now you said hoping to add soon. So walk me through your decision-making process there, if you could.
No decision, it's cash. I'm all in, right? As soon as I get some extra cash, I'll put it in.
Got it. So, okay.
That's how I'm dealing with this is, and I'm hoping I get a dip, but if not, I'll still buy it because I'm not worried about the 50% correction. Just to clear, why am I not worried about the 50% correction? I've got no leverage in the trade.
Yeah.
I know what I can stand to lose.
Yes.
It's not, I'm an all in, this is my whole life is riding on this. It's not.
Yeah.
This is a very significant bet for me, but taken from a calculated risk perspective.
Okay, I want to jump into another theme I've heard you cover, which is essentially the end of the US dollar bull market and the emergence of emerging economies. And a quote that I just loved, I believe you tweeted it, was maybe the best strategy for investors, this is not verbatim, is to buy emerging markets and go to the beach. So walk me through that thought process and what does that mean?
So firstly, let me just give you a path. I think there's a correction coming, as we talked about at the beginning. I think it'll hit emerging markets too. The dollar goes up.
Okay.
Emerging markets are going to get smoked. Everything does. But in the end of this process, the dollar is either likely to break lower over time. I think it goes higher first, but over time breaks lower. Or my actual hunch is it trades in a sideways range, which is miserable for FX traders, amazing for emerging markets. Stable US dollar is beautiful. So if I look at the chart of the EEM as a simple ETF that you can trade, look at the monthly chart of that, or the underlying MSCI Emerging Markets Index, and it's just a massive wedge pattern. I mean, it's a thing of beauty. And it looks like you've got, most of these emerging market cycles tend to give 400% upsides. That's huge. And that's how it always plays out. So we are almost record undervaluation of emerging markets versus developed markets. We're the largest outperformance of the S&P in history against emerging markets. We are set up for a hell of an opportunity. And if the dollar stabilizes for any period of time and there's some global recovery, which obviously will be coming, these countries have less debts, less aging demographics, less problems, more outperformance. So, and it is generally a 7 to 10 year cycle. So you can buy emerging markets and go to the beach.
And how do you play that market? What are the options available to investors, Raoul?
So how you asset allocate is 3 buckets: liquidity preference, time preference, risk preference. So liquidity preference, you want the thing that's liquid that you can get in and out of when you start the trade, when you don't know it's confirmed, because you want to be able to get in and out quick, right? You'll do the same in crypto. It's Bitcoin or nothing at that point. Then you start setting your time preference. I feel like I'm on the trend and I've captured what I think is the start of a larger move. So therefore, I'm willing to hold longer holding periods. So then I might start looking for other areas, or I build a larger position. And let's say EEM is the chosen starting vehicle because it's an ETF, you trade in and out. Then you get into risk preference, the next part of the cycle. When it's established, all investors then start moving out the risk curve. And that usually happens maybe a year or so afterwards, maybe 2 years, where they start thinking, actually, I want to juice this trade. So we see it in crypto markets. It goes to Ethereum, and then it goes to Cardano and other things, and then maybe it's DeFi, right? People move out the risk curve because they think, okay, the trend is set, and I can hold a bit more risk than I want. Credit investors do the same. They start with single A, they go down to triple Bs, and then they go into junk. The same way in private sector lending. The next phase behind that is then choosing which markets do you really want to own. Where could you get alpha above and beyond the EEM? My view for that is India. I think it is the next decade. I mean, I'm half Indian, I spent a lot of time there. And this market, what's going on in India at an infrastructure level, technology level, is mind-blowing. So there is a lot going on there. It's still early. It's like being in China in the 90s. So I'm very interested in that. I'm also interested in the countries that surround India that have young populations, low debts, high household savings. I call them the monsoon countries. The monsoon trade winds was the old spice route. And India's at the center. It's basically the Indian Ocean. That is the less investable, which is the Swahili coast of Africa, Kenya, Ethiopia, Kenya, Tanzania, down to South Africa. But on the other side, you've got Singapore, Indonesia, Malaysia. On the north, you've got the riskiest but most rewarding market of all is Iran. You've got Dubai, you've got Saudi, you've got Morocco, Egypt. There's a bunch of these countries that have incredible demographics, and some will be long, some will be shorts, but you'll have a lot to play in that sphere. But with India as the core allocation that should outperform.